Is it too late? Have we all missed this boat? Is it too late to be bullish on stocks, Lucy?
Well, stocks are for the long term, as we know, so it's never too late. But in the shorter term, clearly we've had a quite strong bounce this year and this over the last couple of weeks, which is down to the Fed supporting markets more than had been anticipated previously. Now that's all good, and clearly, the monetary stimulus is the most important support to all asset markets. But we're just really going into an earnings season, and we want to see what's happening with growth, because earnings growth in the first quarter was down, and part of that is due to rolling off from the tax reform the year before, but also the impact of stronger dollar as well. And we want to see what's really happening with corporate spending, with corporate confidence, because from a top-down perspective, you are beginning to see some more nervousness and about the uncertainty. So that's what we want to see, and then be able to really differentiate and see what the impact of the trade tensions is on earnings, and also this issue of corporate spending and confidence.
OK, so yeah, to what extent do the trade tensions influence that level of confidence amongst corporate leaders? We'll return to the subject of earnings and what we're looking for there and the individual stocks that you like. In terms of the big picture, your focus obviously on global equities, yeah, Lucy, but in terms of where equities rub up against other asset classes, this has been quite a stunning rally in equities, hasn't it? And I've got this chart that shows the everything rally. This has been a rally that has lifted not just equities, but many other asset classes because of the generosity, in many cases, of central banks. Yep. Is this something that continues, or does something break here? Can we continue to see everything rally together?
Well, if all the banks are working in unison, which they have been more recently, yes, you can. And that is different to where we were last year when you had the Fed tightening and everyone else just sitting pat. You now have the Fed moving, or sitting, waiting, but looking as if it was going to move the other direction, and the rest of the world really needing to loosen but not being able to. So yes, asset prices can move in unison when that's the situation. So
central banks having a big effect on asset prices. Are they having an impact on inflation? Can central banks, and this policy towards more dovish central banking, can it boost inflation, or is something broken there?
Well, it's not broken, but the relationship between employment and wages certainly seems to have changed, and that's one thing that the Fed themselves have been confused by and are looking into in more detail. And that's been the biggest change, really, that you can have such low levels of unemployment, apparently, and such muted wage growth.
What do you make of the dollar at the moment, Lucy? We've got the dollar heading for its worst month since January 2018, of course, with a move to a more dovish stance. Yep. No surprise that the dollar was a big loser in yesterday's session. But it had been actually quite resilient in amongst all of the talk that the Fed would cut interest rates. I mean, how does the dollar influence your world at the moment?
Well, having a slightly weaker dollar will certainly help as far as the US multinationals are concerned, because they have seen negative earnings in the first quarter. So some weakness there will help that. Apart from that, I think it's going to be the relative levels of growth that we're seeing.